Retail price action is a distraction. Beneath the daily volatility, a structural shift is moving the asset from the retail market to the institutional ledger. On March 17th, the SEC and the CFTC issued a joint ruling. They officially classified XRP as a digital commodity, a category for assets whose value is driven by network utility and supply, rather than a common enterprise. This decision concludes a 5-year legal conflict. It removes the security label from XRP and provides the same digital commodity status currently held by Bitcoin. This classification arrives just as the SEC faces a March 27th deadline to rule on multiple spot XRP ETF applications, creating a specific window for institutional entry. To see where the market is actually heading, we have to look past retail sentiment and check the institutional data. Since launch, XRP ETFs recorded $1.44 billion in cumulative net inflows. The accumulation rate remains steady, even as the underlying price fluctuates. Institutional filings confirm this trend. Goldman Sachs disclosed a $153.8 million stake, making it the largest institutional holder. These large-scale buyers are positioning themselves before the March 27th SEC decision, anticipating that further approvals will widen the path for institutional capital. If institutional demand is high and the legal status is clear, it raises a question: why is XRP still trading in the $1.40 range? The disconnect is driven by the broader economy. Geopolitical conflict has pushed Brent crude oil prices above $110 a barrel, creating an energy shock that is pressuring all high-risk assets. Simultaneously, the Federal Reserve is holding interest rates at 3.75%. High rates and rising inflation forecasts are forcing investors to rotate away from digital assets towards safer, yield-bearing alternatives. The current price is a result of these external pressures. It is a macro-driven suppression that masks the structural upgrades the asset has received. The physical infrastructure is also locking into place. Ripple recently integrated its Hidden Road platform into the DTCC's NSCC directory, connecting the XRP ledger to the core of the U.S. financial system. The DTCC processes quadrillions of dollars in transactions every year. This integration allows traditional post-trade volumes to settle directly on the ledger for the first time. The final step is political. In April, the Senate is scheduled to mark up the CLARTY Act, a bill designed to turn the digital commodity classification into permanent federal law. Between the March 27th ETF deadline and the April congressional markup, the legal and technical timelines are intersecting. The infrastructure has moved from a proposal to a live component of the U.S. post-trade system.